Good morning, everybody. It is Wednesday, November 16th. It is still OPEX week. VIX futures roll over today. The VIX contracts roll over today. And wow. I mean, wow. Like I said, for a lot of the new members, Taco Tuesday we have termed for nearly a year now because typically you will get a sell down on a Tuesday, and yesterday was incredible. Low of the day, 4 points lower than the previous close. A perfect gap fill. Had a little bit of pressure there with that gap up because we did go up there and pressure that upper area there, that gap from September 13th. 40.37. That's the bottom end of the gap. The top end of the gap is 41.10. We'll get into that in a little bit, but yesterday, again, just absolutely everyone who took the trade on Monday with the SPY 395 puts got out perfectly. Anybody who followed on the SPY 400 puts yesterday got out perfectly green with a $2 gain on it. Better than $2 gain if you than me. But again, the spreads are your money. They're your money. They're your money. Your money. Took that 45, 40, 45, 40, 40 right at the open, got $1.70. I continued to blast in there on the spreads room. What you were getting a little bit more, you were getting close to it throughout that other trade there, the 47, 65s. A little bit late because that was at 10:47 in the morning. But then, boom, the news came out that there was a missile that was launched by Russia, which wasn't launched by Russia. And now it's all come out that it was launched by Ukraine, trying to shoot down a Russian missile, which actually means if Ukraine shot it down, that the U.S. is the one that shot Poland, because we're the one who's supplying them with missiles. Not going to get into politics. I am so happy Donald Trump is running for president in 2024. Unfortunately, he's not on Twitter, but oh my God, 2 years of him and DeSantis absolutely ripping each other apart. Buy popcorn. Buy as much popcorn as you can. It is going to be hilarious. Anyway, going into what we're doing, which is making money every day, the spreads, I will post it in here in a little while. Basically, need to get the numbers. Need to get the numbers. Need to see where we open. And where we open, I'm going to go over here. It's starting to lean a little bit bearish. October CPI year over year, 11.1% over in the UK this morning. The FTSE has had absolutely no reaction whatsoever. FTSE is down 0.22%. As for us, we do have some comments today. Feds George just came out with some very pornish bear comments. Bringing inflation down without a recession might not be feasible. She's right there with Jerome Powell. Anyway, let's get into the charts. One thing I want to do is go over here quickly. The NQ, the NASDAQ. This is, like I've said 100 times, the Dow Jones is your strong arm. The Russell 2000 is your weak arm. The NASDAQ is your legs. And your torso is the SPX. This is why we are where we are. And it's because of the NASDAQ, because we're above this 11,700 line over here on the NQ. And the NQ from last week Friday, going back last week Friday when we posted the lows there, is up 13.94%. SPX, different story. 8.94% from where we rose over on that high. And like I say here yesterday, I love to color code my charts. We filled that gap perfectly. Perfectly filled that gap so I can remove that. Here's the gap over here from September 13th. And more importantly, this line right up here above, 40.64.44, that's the 50 retracement going back to the March highs, which, if you remember, we had that incredible rally after Russia invaded Ukraine from 41.15 up there to 46.37. That's the 50 retracement right there from our lows that we posted over there in October, 40.64. So it is going to be a line to be looking at. What we have here yesterday was a close below the open. So it is a little bit precarious thinking that we could get a follow through to the downside and maybe come down to that 3908 level, 39 3889, 3908, and that being the dip of the dip for the dip. And I'll show you why. I'll bring over one of my charts I have over here on the front screen and load it up for you. You see over here on the SPX, up on the top here where I'm looking, top left, as we had that gap up and we've ridden up from that gap up was right here, right to 3860 was where we opened. And we've had that run up here to 2884 yesterday. You can see here the RSI on the 60-minute chart has just been dangling lower and lower constantly. Same thing over here with the NDX. The NDX, when we had that big gap up over here on November 10th, riding up higher, and from that, we've just had this lower declining RSI over here on the 60-minute. So what we have there is we have a sell divergence, and that sell divergence, not healthy to try and run against it and move price up higher because obviously it's relative strength. So therefore, because we do have that sell divergence, I would be suspecting, considering it is OPEX week as well, we could very easily get a dip down here into this 3908, 3890 level, right to that 100-day moving average, which unfortunately you can't see because it's right on top of that 3908. And that would have the 60-minute oversold, and that would be our healthy opportunity along to go and get into some long calls heading into a shortened week next week, with it being Thanksgiving, which when you get shortened weeks, less activity, that's always bullish because it takes activity to have sellers, and that's where we're looking at. Over here again, the NQ, that's the thing, that's where your dip is. I'm going to bring you here into the VIX, and I'm going to show some pictures of the VIX now. VIX right there filled that gap perfectly yesterday, and now it's holding above that 2371. So very, very, very precarious to try and tell you that, hey, you're going to get a little bit more dip on the indexes and everything else. I want to bring you out here a little bit more zoomed out, and that's here where I'm looking, the daily. And as you can see here on the daily, I was showing this a few weeks back, incredibly oversold RSI on the daily. Now that we have this little bit of a dip, if we can get a little fraction of a dip lower in price, you are going to have a major buy divergence on the VIX daily. But again, because we are already oversold on that, that's what we're looking at. This was the same thing that I was looking at here, was how oversold we were getting over on the weekly. We got extremely oversold back in July when we had that run up there into August. But as of right now, we are very, very oversold on the weekly on the VIX. So I would be very cautious. I would be thinking, when being bullish, you're a teenager sneaking out of the house. You've been sneaking out of a couple of weeks where the indexes are already run 500 points from the October lows just 5 weeks ago today. You're sneaking out of the house, you're going to get caught. So you want to kind of wait if you want to get into a very strong long position and let this thing dip. Let's get an oversold 1 hour. Let's get a nearly fractionally close to oversold 4 hour. Get a nice dip down there, somewhere in that low 3,900, high 3,800 level, and then head into the holidays, or at least Thanksgiving, heading into December, heading into the FOMC meeting coming in December, and again, be still expecting somewhere up there in that 4250 area. Very likely to see that August high up there at 4,300. Have a fantastic morning. Enjoy your coffees. I will see you in the chat room.